Hello. Hello, TikTokers. Godric here, your stock market mentor. Monday nights, a little late, midnight. I have a few stocks for you tonight. Super microcomputer, SMCI. We're going to talk about Palo Alto Networks, PANW, Tesla, TSLA, AMD, Advanced Micro Devices, and SKX, which is Skechers. We're doing stock market Monday nights. Thank you for joining. Godric here, your stock market mentor. John Belinsky, Jose Cabrera, Benji, welcome. Give some likes. Share, just share once, each of you. Get some people in here. Let's go. Dom, welcome. We're going to talk about some stocks tonight. Last week, somebody gave me STC Stewart Info Services and also Avgo AVGO, which is Broadcom. So I'm going to talk about those. Somebody asked about those. So I'm going to run those through my criteria. We have 11 criteria. BAB, NVDA. NVDA, I think, is still good. It dropped 6 points today. That was tough. If you're long. Most of us are long, unless you had some puts. Going to have to climb back up out of that hole, right? We've all been down, right? We'll go tomorrow. Yeah, I think so. The good news is that the Dow Jones went up today. Let's see, that's Broadcom. Dow Jones. So the Dow Jones is 39,411. We know the high is something like just about 40,000. So like 600 more points, and we're back at the high. So yes, I think we're going to break that this month or next month, and I think we're going to go higher in the summer. I know that's weird, but it's just an economic environment. I think since Trump eased up on the corporate taxes from 37% to 22%, that made a huge difference. All that profit goes back into those companies instead of paying the IRS. And, they can stay healthy, they can provide jobs, and they're getting a nice return on the stock market. And we haven't really had any problems with the stock market, even though we have like worldly events happening. Thank you guys for joining. Give me some likes and shares. Share just once, and I'll be happy. Get some people in here. NVIDIA, yeah, down 6. Let me see. I think I have it pulled up here. Yeah, 118. The volume today in NVIDIA was like 470 million, which I think that's probably a record. And that's scary because it's like so much trading, There's buyers and sellers. So the Dow stocks were up today, and the tech came down. So that's like, it's not all bad. People are moving money from the tech to the Dow Jones motor stocks, brick and mortar stocks. And I think that's somewhat positive, at least not like a correction happening, right? I don't really, let me see what you guys, I'm going to try to read. Don't know much about stocks. Okay, JDQ, okay. Let me help your mentor in stocks. Open your account at Schwab. And I just say Schwab because TD was the boss for many years in customer service, which is the most important thing. Call your broker 24/7 and get questions, get answers, get answers to your questions, check your accounts. They walk you through trades, and then Schwab bought TD, or they merged, same difference. So just open your account with Schwab, put a couple $100 in there at least, maybe $1,000 if you have it, and just start buying stocks. And you just learn. You learn that way. You can pull up the data on your computer, on your phone. This here, NVDA, it's just my stocks app on my iPhone. So that comes free. You just click on the stock. It tells you the daily price, the move. Like after hours, it shows here down to 116. The days closed down to 118. Volume, look at volume. Look at PE means profit. If it has a PE, that's positive number. That's profit. Write that down. If the PE is a dash or a negative, that's a loss. Your company's losing money. I always try to have a positive PE. A positive PE is like 28 or 50 or 100 or 10. But I don't like a dash or a negative because technically it's losing money. And how much money could you put of your hard-earned money into a stock that's losing money? So I get the concept, but I don't recommend it. And then just start buying shares. Start with shares. Don't do options, because you start doing options, you can lose all your money. Let me just tell you out front. Welcome, guys. Should I hop on inverse leverage in NVIDIA? I wouldn't do that. I would just hold on to a few shares, and then if you're confident in the stock, I'd buy a couple calls. That's what I do. About 4K worth of NVIDIA right now. Yeah, I like that. 4K NVIDIA. You want me to do a cover call on NVIDIA today for you? I'm going to do that for you. NVIDIA cover call. I teach to retire into the stock market and make let's say 4% return a month on cover calls, and that's a good way to pay your bills and replace your job. Ideally, retire into the stock market. So we have a 100K account, which is a nice little nest egg. Most of you guys can get that together. 4K a month. That's on cover calls. Yes, your stock can go down. It's like if you own real estate, the value can go down, but if you have an apartment, you can rent the rooms. If you have a house, you can rent the house. Get money. Same thing with cover calls. You own the shares, you rent the shares every month. You get income, 4%, 3%, 5%. Tesla pays, close to 5% a month. These other stocks, depends on how volatile they are, how steady they are. Just checking their comments. So, anyways, I think we're okay in the market. I don't see a crash in the future. I think it's going to be okay. Economically, we have a lot of good things happening. A lot of the S&P 500 companies are doing great. They're hiring, they're expanding, their PEs are good. We're going to go into 2025 positive. Christmas rally, everything the same, I like to think that regardless of who's president, so just get the best stocks. You don't have the luxury to buy questionable stocks. Just get the best, Okay, super microcomputer. Let's pull that one up. This one is pretty roller coaster ride, pretty risky, but it's doing great. Has a great cover call. 819. I think after hours is showing down 7, because it was down like 60 points during the day. Oh, down 78, I think, during the day, Monday. Dividend investing. Let me just talk real quick about dividend investing. Okay, dividend investing is great. Look at stocks like Coca-Cola, 3% dividend, KO. Look at MO, which is Altria, 8% dividend. Okay, MO. And then look at Whitehorse Financial, WHF. These are dividend stocks. The value of a dividend stock is you don't have to trade. You don't have to worry. Just start collecting the shares. White Horse is paid about 12% dividend. Those are three that I like: Coke, Altria, and White Horse. The value is that you're going to get the dividend. They generally pay every quarter, so every 3 months. But the thing is it's just kind of like an income. Like once you can get, like, say, $1 million together, and you're getting, let's say, 8%, like in Philip Morris, that's $80,000. And what? You can live off that. That's your paycheck. And you don't got to really worry about ups and downs too much. I mean, if the stock's going to maintain, look at your dividend stock. Don't just get any stock. Look at that. It maintains the dividend, one, and also the share price maintains over the years, 5 years, 10 years. And if that's happening, then it's good. I just gave you 3 good ones. Now, Coke, it only pays 3%. So out of $1 million, that's only $30K. So you're looking to get some share growth on that one, meaning that if the stock is 62, here's Coca-Cola. Let me pull it up for you. Stock is 64, then 100 shares will be $64. $6,400. And 3%. Let's just say 10K. 3% is only $300. 100K is $3,000, and $1 million is $30,000. But if you look at MO, I'm gonna pull it up for you. This one is $46 a share. Ooh, it went up. And if it's paying 8% of $1 million, that's 80K. So that's a little more nice, And then White Horse Financial is paying about 12%. So $1 million is going to pay 120K. So like that money just falls into your account. Okay, start small. It builds up over time. I would put. Here's something you want to write down for your journal, your notes. Put your account to reinvest the dividends. Okay, instead of there's 2 choices. You can get cash dividends, or you can get reinvested dividends. Call your broker. You can get cash dividends. It's just going to drop in cash. They're going to show you some extra cash there every time the dividend pays. Or you can have them click reinvest the dividends. So instead of getting cash, you can buy shares. So instead of putting like $4, so like Altria pays 98 cents a share per quarter. So that's, let's say, $4 a year per share. Instead of getting $1, and $4 a year per share, it's going to be like 1 share, 0.001. It's going to start buying shares. And then that's exponential. When you start getting shares, then you start getting dividend on your dividends, and that's exponential growth. I think Einstein said the 8th wonder of the world was compound interest. So you're compounding your investments. Start doing it for 5 years, 10 years, 20 years, and you'll see like this massive growth. That's the idea. And if your stock survives, hopefully it does, then you're good. If your stock gets clobbered or goes out of business, then you lose that one. Hopefully you can diversify, maybe pick a better one. So again, dividend, to wrap this up, is good because it's like a paycheck, and you can, if that dividend is reliable, if they pay it every year, if they never cut their dividend, in the case of Altria, in the case of other stocks, Coca-Cola just hit 100 years on the stock market, and that's pretty damn awesome. That's a record. So these companies have withstood the test of time. So when you get a new company that's brand new, I would wait. I would just watch them. I would wait, until they've at least lasted 5 years or 10 years. I like 10 years as like a threshold. If you can see this chart behind me, let me see if I can. If you can get a chart that has a 10-year, that's traded for 10 years, that's a threshold. That's like a checkbox, right? Some of these companies, honestly, are fly-by-night. And if you invest in a new company that's only 1 or 2 or 3 years old, it may not be here by year 4 or 5. So these companies that have been going for 5 years, 10 years, 15 years, 20 years, that really means something. NVDA. So dividends are good. Start small, build them up, put your account to reinvest in dividends. And I like to say dividends get paid while you sleep. Just own the shares. Okay, back to Super Microcomputer. I'm going to show you the cover call on this one. If you can get 80K, some of you guys have that, like, no problem. You do a cover call on Super Microcomputer, and we're going to look at that. Options, 81K. It's $819 a share. Okay, so I'm going to click all. So it's June. We're going to write July. We always go to the third month. NVDA, all the techs have been falling for 3 days, and that's why people trade. If you can get these trades going, if you have either shares or a call option, and you have like a nice profit, pull the trigger, right? And then what? Then it comes down again, buy, goes up, have a profit, pull the trigger, sell, right? You're trading. Most of us, I just sit here, watch our stocks go up and down and do nothing. We're sitting here doing nothing. And then these mutual fund managers, by the way, who, manage 800 million or $1 billion or more, they invest other people's money. They have to trade, and they have puts, and they have calls. So when it swings up, they got to pull the trigger. They trade, they sell. And then it goes back down. And then we're sitting here as small people looking at our stuff go down. Oh, no. And then climbs up slowly. What? They pull the trigger again. Comes down. So think about, like, the big money. They don't have the luxury to fool around. If they don't make money, they get fired. So their boss is like, you better do that trade. So think about, I said last week, bulls make money, bears make money, pigs don't. If your goal is to get 2 points or 2% or 20%, whatever your goal is, but my goal is to get 1 point or 1% or 10%, who's going to hit their goal faster? That's right. So don't be greedy. Put a goal and pull that trigger when you get a profit. That's my best advice. Guys, I appreciate you. Give me some likes. SMCI back to 900. I think so. I think it's funny, it takes time to climb in steps, and then down. Climb takes time, effort, struggle. We're like praying, and then down. So when you have a profit, pull that trigger. But I was going to show you the cover call on Super Microcomputer. So it's June. We're going to look at July 19th, always a monthly. So the stock price is $8.19. So we're going to go, let's say, like maybe around 8 something. Okay, let's say 820 is the share price, close enough. We're going to count to the sweet spot, which means the premium and the share growth is the same. So 820 to 860 is 40 points, and that pays 53. 50 is going to be 870. And okay, here we go. Super Microcomputer, write this down. Cover call, July, 870. Strike. And that pays 49 points. Let's just say 50 points. 49 by 50. Let's just say 50. Put a limit order 50. Put a limit order. They'll probably take it within 20 minutes. So 50 points on a cover call means $5,000, okay? A month. And what? You buy the shares here at 810. You agree to sell them at 870. So you can get 60 more points. Actually, there's more share growth. That's fine. No, sorry. 820 to 870 is 50 points on the share growth, which means we agree to sell the stock if it hits 870 or higher. And we're going to get 50 points of share growth for that, which is $5,000. And then we're going to get $5,000 in premium for writing a cover call immediately. That goes in your account. So you could get $10,000 on this trade, and your investment is $82,000. So here's your business. You invest $82,000. You're getting $5,000 a month on Super Microcomputer. Now, Not every stock's going to pay that. This is a special stock. Now, the challenge is that you're on this roller coaster ride with this stock. This stock, even though you're getting 50 points a month, it can move 50 points a day. Hopefully, I mean, ideally, it's not going to move down 50 points every day or up. It'll be like this roller coaster ride, you know. And that's one of the hardest things to handle is your stock going up and down, you know. And on a cover call trade, you're just going to kind of buy the shares, write the cover call, ideally the sweet spot. So the share growth is the same as the premium. And you're just going to wait there till next month and do it every month. If you could do $5,000, which is 50 points, on an $820 stock. Let me get the calculator out. Let's do return on investment. What you do is you put 50 points, which is your premium, divided by stock price of 820. Let's just round it up to 820. 6.09%. So 6.1% return on a super microcomputer. That's what I wanted to show you. That's a huge return. You can do 10 cover calls a year. That's 61% return a year just on the cover calls. 61% return. And if you're getting like, you know, $1 million account, that's $600,000. Will that work for you? Like, I see some cigars and some champagne on that. How do you research companies to know which ones? Okay, user, thanks for the question. I have 11 stock criteria. I'm going to just run them by you real quick. You can listen and write it down, but it takes a little bit of time to understand, but this is what it is. The first one is volume. Invest in stocks with high volume, ideally 2 million shares traded per day or more. Check. It has a dividend. Look, it has a yield. That's good. A dividend's better than no dividend. A lot of stocks don't have a dividend, but if they have a dividend, that's good. Check. Cover call. I just showed you how to look up the cover call. You click option chain. You go to the next month. If it's June, you go to July. If it's July, you go to August. In super microcomputer, you're getting 6.1% return on the sweet spot, which is excellent, which is 60% a year. But, you know, you probably won't get that because the share prices will probably fling different directions. And let's say you might lose some share growth. So maybe I get 50%. I won't be mad at you if you get 50%. But, so cover call, check. Stock splits. Write this down. Everybody, go to stocksplithistory.com. It has like a yellow diamond. That's how you know you're there. And put your stock in the little box and see if it has stock splits. If a company has stock splits, at least 2 or 3 or 4, the theory is you're going to keep on having stock splits. And a stock split means stock went up and up and up and up and up in price, like NVDA did, like Chipotle did, like Apple, Microsoft. All these great stocks, and then split down, and what? Back up and up and up and up, and then another stock split down, continue. What is it? It's otherwise known as exponential growth. So some people will tell you stock splits are an accounting trick. They don't change nothing. Ain't no accounting trick. A stock split is a very successful company that's adjusting the share price to attract more investors, and not all companies can do that. There's a reason to do it. You don't do it for no reason. You do it because your stock price is doing great and it's going up. Reverse splits don't count. Stay away. Okay, you want forward splits, which is 2 for 1, 4 for 1, 50 for 1, in case of Chipotle. Next is market cap. Don't invest in a tiny company. Some of you guys invest in a company that it has the value of a house in Beverly Hills. I have to do 50 billion or more minimum. Somebody gave me Steward Info Services. The market cap is 1.72 billion. Not enough. So And you're not going to get the exact stock that's, exactly everything is going great. But on the market cap, ideally, you're going to ride that market cap through 50 billion, and it's going to keep on going up. What you want growth. You want people buying the shares. You want the company expanding. So you want growth. So if you're in a stock for a length of time and the market cap is kind of stagnant and it's below 50 billion, you probably gotta cut it because it's stagnant. It's not growing. A successful company, let's say Chipotle, it rode right through 50 billion. The stock went right from 1,000 to 3,000. Now it's splitting 50 for 1. So that would be a good example of growing market cap. Okay, and then what? The 10-year chart. Buy a stock that has a good 10-year chart. Behind me is a 6-month chart. A 10-year chart basically is the same thing. You click on the 10-year, and it's basically making money in 10 years. It's going from the bottom left to the top right. That's one of my best indicators. Don't buy a company that's going down the wrong way because it's losing money. The idea about investors is they want to make money over time. If you're losing money over time, that's major problems. So you want to have a stock that's going up over 10 years, ideally a nice return. 3 to 5 year. This is another criteria. I call it, can it double? Can your stock double? Look at the 3 to 5 year chart. 3 years or 5 years, same difference. If your stock has doubled in the last 3 to 5 years, it's a check mark. The theory is it can do it again. NVDA classifies Chipotle, I think AMD. So if you look at the 5-year chart, it's doubled already or tripled. In that 5-year chart, it can do it again. Next one is share price. I like to have a share price of 100, 200, 400, or higher. And that means it's a high share price. It's respect. If you have like a low share price, $5, $1, like a penny stock, no respect. Okay, so when you have a nice high share price, what? Because what? It's proven itself by going up and up and up. If you're trying to invest in like a $20 share price, like where has that stock gone? Like who's making money in that stock? Let's say Palantir, right? Who's making money? Because it's been $20 for a long time, right? Higher or lower. But if you're in like, NVIDIA, that's like tripled in the last 5 years or 10 years, AMD, Supermicrocomputer, Apple, these stocks have done great. Okay, so can it double? Share price. I like to compare it to like defined wine costs more. Gold is more expensive than silver. So a high share price is better for those reasons because people are buying the shares and they're going up. Okay, so if it's a dividend stock, it could be like $20 or $50 or $60. But if it's like a high profile stock, like a tech stock, like NVIDIA, gotta be at least $100, $200, Consider the stock splits, right? Consider that, obviously. But like NVIDIA was $1,200, and now it's $120, $116. A couple more criteria. PE. Like I said, the PE should be positive. Either it has to have a positive number, ideally like 20 or 30, 28. But if it has a dash or a negative, that means it's losing money. Stay away. Can you buy? Can you buy the product? Get a company that you can easily buy the product. I had an associate who bought this company called She Beverage, and it was like an IPO, and they were trying to go public, but there was no product. It's like she got corralled into an investment that wasn't even selling. It was like an idea. So, Coca-Cola, you can buy the product. Netflix, you buy the stream. Starbucks, you go get in line to buy Starbucks. So, ideally, you can buy the product. That's a good criteria for stock selection. If you can't buy the product, I would stay away. I would not give that to checkbox. I think NVIDIA might go down a little more, but I think we're going to head back up. I think the tech stocks just had some of the big players selling. I don't think it'll go that much lower. I think it'll probably turn around and go back up. It hit 140, which is great. And I know you guys didn't sell because you got caught, because you got greedy. You were a pig and you got greedy and you lost money. It was at 140 like 3 days ago. Don't complain. Blame yourself. Okay, and the last criteria is an all-time high. I got this from Neil O'Donnell. Oh, McNeil, the dude who did Investors Business Daily. William O'Neill, taught me that you can buy a stock when it hits an all-time high. That sounds weird, but the idea is behind that, if you have a stock that breaks an all-time high, it's breaking out and it's getting a lot of attention from traders, investors, it's hot. The idea is that it'll break more all-time highs, like this, like behind me, right? So in theory, you could buy stock at a low, which is great, and then ideally it'll go up. But it's even, for a lot of stocks, depending on the stock, when it breaks all-time high, it goes higher. Like you can look like a Nike, Apple, AMD, Netflix. They're breaking new all-time highs and they're going bonkers. And over 5 years, 10 years, 20 years, 30 years, you got this ridiculous exponential growth. Microsoft, Apple. Just look at the 10-year, 20-year. These stocks have hit all-time highs repeatedly. If you're waiting for the all-time low, you might get stuck down there. It's like reverse psychology, I think. Check it out. So those are the 11 criteria. I shared that with you. I'm going to post this on my YouTube channel if you guys missed any of it. But that's 11 criteria for stock selection. I talked about the SMC, the supermicrocomputer cover call. I want to do a few more stocks. Thank you guys. Give me some likes. Average $9 price ago. What stock was $9 5 years ago? Thank you for joining, Christian. NC Spaces. Pacola, appreciate you. Swizzle, welcome. How you doing, Swizzle? I know who you are. I think. Don't we know each other? Eric G. Send me a few shares, guys. Hit me up with a couple likes. If you guys give me a follow, I'll follow you back after my stream. What about NVDA 1 month? I think NVDA 1 month will maintain and go up. How do you think it's going to drop below? That's my question. What's your question? Cat dude, what's your question? Really thoughts make some of the big bucks. I know some folks made big bucks. Yeah, big bucks. You know what about big bucks? Like other businesses or like managing your money, you can make big bucks, but here's the thing: can you keep the big bucks? Like discipline. Don't spend more than you make, right? So you live under your means. So like even if you make big bucks, you can still be broke if you spend the big bucks. So what I'm talking about: patience, discipline, control your spending. Some of you guys hit big trades in the stock market, you get all happy, and then you go out and blow all the money, and then you have what? Nothing to trade with. So control, discipline, money management. Look that up. Google that. Okay. Bought another 100 shares at 135. Should I sell and buy another 20 shares? Okay, so you're talking about NVIDIA. Okay, so look, if you buy 100 shares at 135, what I would do, I write the cover call. Let me help you out here. Look, the market's doing great right now, okay? Let me get you a nice return on NVIDIA. I'm going to give you the cover call for the leap. We know that we're going to have an election in November. There's going to be a lot of hype. And look at this. Okay, it's June, right? You buy 100 shares in NVIDIA at 135. I want you to put a cover call, let's say, for 150. Let me look at January January 2025. Okay, let's do NVDA. I'm gonna put it up for you. I want you to do a long-term cover call on those $135 shares. Watch how much you can get. I'll show you. All right, and you're not going to lose any money on the shares because I'm going to write the cover call above the 135. All strikes, all months. Okay, here we go. January 2025. So you buy 100 shares, the video at 135. Yeah, you lost money. Yeah, because you just kind of sat on it while it's going down fine. What you should have done is write a cover call sooner, but I'm going to help you out here. Let's say the 150. What is it paying? How about the 144? 140. Okay, I'm going to save you a trade. I'm going to save you a trade. Look at this. The NVIDIA 144 is paying $11.30. So you got the shares at 135, okay, NVIDIA. For January, which is technically a leap, 2025, cover call, sell, one call on those shares, 144. 144. It's paying 1130 by 1150. Just put them in order 1140 or market order, same idea. You're going to get $1,140 back, okay? You're going to get 1140, and then you're going to basically hold those shares for 7, 8, 9, 10, 11, 12. So 6 months, but you're going to get $1,000 premium. You're going to have the ability to get all your share growth back as long as the video goes back up, which it should. From 116 here, you're going to agree to sell it at 144. So I'm going to explain something to you. When you buy the video at 135, and you write it all the way down to 116 with really doing nothing but holding it, you've already lost. You're in the hole. If you were managing money and your boss, Mr. Morgan, comes to your desk and says, "Where's my money?" You've lost you lost 20. You lost 28 points already in share growth. It's already done behind you. So what you're gonna do, you're gonna climb back. You climb back out of that hole. Okay. So write the cover call for next January 2025. Get $1,100, which is at least something. It's like 11 points back in your pocket. From 116, 11 points is 127. Okay. And then you're going to be able to get all the share growth all the way back to 144, which is going to save your trade. So you're going to get an additional. So from the 135 you buy that, you're going to get an additional 7 points, which is $700. So you're going to end up having a positive trade, $700 on share growth, plus $1,100 on premium, $1,800. Yes, it'll take 6 months, but you're already at 116 now, so you have technically a $2,000 loss. You follow me? Already done. Like people that trade, they go, "Oh, my stock's down, so I don't want to sell it because if I sell it, I'll take a loss." Bro, you already lost. Like if you're managing money, your boss says, "Hey, let's look at your account." Dude, you lost money. You can't be like, "Oh, I'm not gonna take a loss because I won't sell it." It doesn't work that way. Like a proper trader can sell everything and then take a trip to the Bahamas, drop of a hat. So you can't be like, "Oh, I can't sell because I'm stuck. I'm stuck in my trade." Real traders don't have that luxury to do that. If you manage your money, every day you take risk. Every day you account for your losses or gains. Every day. Okay. Do you think the video will go back up? Yes, the video will go back up. So will AMD. Don't worry. Hey guys, give me some likes. I'm trying to answer all your questions. Do one share. Just do one share each. Be happy. And I'll follow back everybody at the end of the stream. Okay, we talked about supermicrocomputer, cover call, 6% a month. We talked about an NVDA save your trade, 6-month cover call. We talked about the 11 criteria to stock selection. If you didn't catch all that, I'm gonna post this on my YouTube. YouTube is Affluence 8. Write it down. Affluence 8 on YouTube. Affluence 8 with the number 8, no spaces. Affluence 8. That's me. That's Godric. I'm new to investing, and I bought 1K in NVIDIA. What else should I do? Invest in ETFs. ETFs. I like the Qs, triple Qs. The triple Qs are a nice ETF, which is like traded like a stock. What? It's the top 100 NASDAQ stocks, mostly tech. QQQ, Invesco. The share price is $4.76 right now. Let's see. 4.76. Wait, hang on. Let me get it right. 4.73. So, one share is $473. It's kind of steady. It's not going to go on a roller coaster ride like NVIDIA will or like Supermicro Computer will. It's been creeping up. If you guys do call options, you can buy like the 500 call. Oh, look, it just moved. Someone's trading. Like, who's trading like at 1 o'clock in the morning? Like, how come we can't trade? Like, this is all, you guys know what's happening? Look, the Qs are going up right now as I'm talking. Like, who's that? Is that you, Michael? Is that you buying? So, new to investing, so buy some shares. Get a plan where you're going to make consistent deposits. That's another thing. When you start out, I'm going to just tell you this. Nobody's going to put $500 in stocks and trade that to $1 million. That's just a pipe dream. That doesn't happen. What you do, you put consistent deposits. Every week you get a paycheck, or every month for $50, $500, whatever you can afford. That builds up your account. That supports your account. That's important. And then you're going to buy, ideally, great companies, not risky investments, not penny stocks, stuff you can buy, Coca-Cola, Netflix, Starbucks, maybe NVIDIA, stuff that, you can buy that's out there. You learn, take a couple licks, some of your stocks will go down, If you buy call options, you'll probably lose all your money. Let me just tell you that right now. But if you do have a profit, pull the trigger, you can trade. Sometimes it'll go back down, buy, go up, sell, ideally. That's easier said than done. Yeah, some of you know. What should I invest my money on? I like NVIDIA here. It's good. I like the Qs here. Starbucks dipped. Starbucks should be coming back up, I think maybe by December. Starbucks is cheap. It went down a lot. What do you think about Oracle? I don't have Oracle right now. I don't think it's like my top 10. I'll tell you what. Come next Monday, and I'm going to look up Oracle for you, the stock, and I'll tell you what I think. I'm going to run that by my 11 criteria next Monday. I'll tell you what I think about Oracle. Commodities. Don't do commodities. But I know a commodity trader that traded soybeans, and he got to $1 million. That soybeans and lumber. And then, like, a while later, I talked to him. He was broke. Started over. It's a tough game. When you do have $1 million, pay off your mortgage. Buy a house, cash. Pay off all your car notes, all that shit. Because what? You want to have something, write this down. You want to have something to show for it. If you hit a nice trade or a streak, have something to show for it. Take your wife out to dinner. Buy clothes for your kids, Don't be one of those people like, I had all that money, I didn't do nothing, I lost it all. What do you want me to do? Profit. Put 1K. Drop in my lot. I like to, I'm new to investing. Scared. You're scared, dude. Bro. You know what it is? You get numb. Like, after all these losses in stocks, like, over time, you get kind of numb, and you're not really scared anymore. You're kind of more like, I don't know, you're like a warrior. Like, you took so many hits. It's like, you know, um, you're just used to it. Like, you might go into war, and like the new dude is scared because he's like doesn't want to get shot or whatever. But the veteran, like in a war, is like, yeah, like we'll take that hill. We're gonna like put up this cannon, fly this chopper, whatever. So think about getting experience, and that fear will go away. And I think that fear turns into like a knowledge or wisdom, ideally. Um, don't gamble. If you're a gambler, just go to Vegas because you get free drinks. Don't make the stock market a gambling casino, because you can do that and it's not really. I don't think that's right. Safe trades, good companies. Always make consistent deposits. Save money if you have a job. Put money aside. Tax return. Put money aside. Birthday money. You're always making deposits. You're supporting your account. You will have losses, regardless. This is the way it is. Read books. Get a mentor. I'm for hire. You guys, you can pay me. I won't say no. Thank you, so cold 300. Welcome. Thanks. I speak big facts. Yeah, you kind of get numb to the winds too, and you don't let it get to your head. What do they say? Your biggest losses are after your biggest gains. So when you have that big ass gain, don't brag. Don't go blow all that money. Just chill. Maybe put some money aside, buy a few silver coins or a gold coin. Take your wife out. Pay some bills and just chill and wait, be patient, don't brag, and then wait for the next trade. Yeah, you get them to the wins. I'm not taking guests right now, but I will. Thank you for the lightning bolts, Rizzle. Appreciate you. Thank you for the gifts, guys. Love is medicine. Welcome. I'll follow you guys. If you follow me, I'll follow you back. Michael. And we'll share the live at least once. I'm going to do a few more stocks and we're going to wrap up. If you put your stock in the comments, I will I can pull it up if you want. Who wanted Qualcomm? Somebody asked for Qualcomm. Qualcomm Incorporated. Qualcomm Incorporated engages in development and commercialization of foundational technologies for the wireless industry worldwide. It operates through 3 segments: Qualcomm Telecommunications, Qualcomm Licensing, and Qualcomm Strategic Initiatives, etc., etc. $200 a share. I'd like to look at a 6-month chart. The 6-month chart shows you how the stock is doing. Qualcomm was 146 6 months ago. Now it's 200, so it's doing great. It had a little dip. It was 230. Now it's at a 200, so that might be hard for you, right? So I think it's a buy right now. I kind of shared my 11 criteria to stock selection. Next week I'll run Qualcomm through my stock selection and see how many check marks it has. If it has 11 check marks, has all the criteria, probably not going to happen. But maybe if it has 9 or 10, it's great. I know Qualcomm's pretty good. I don't think it's an Apple, but I know it's pretty good. Yes, you should hope. You're so stressed. Dude, I remember back in the day when Philip Morris was getting the lawsuits, a dude came to me, he goes, I can't sell. I'm in too deep. He was literally pulling his hair out, right? Don't get stressed, bro. Don't get stressed. Think of it you're in a boxing ring. Take some hits. Don't just lay down, don't give up, don't get stressed. Like take a few hits in stride. Like you're learning, you're getting your licks in, you get your blows. Maybe dodge, and it'll come back up. However, I do want to tell you one thing about NVIDIA or any position. Have a plan. Write this down. Have a strategy to sell your shares or sell your trade or trade at a profit. So let's say you get in right now at 116. Most of you guys didn't. Most of you guys got it at 140 and now it's down. Now you're stressed, right? When you get in a trade, have a time horizon. You want to trade in 3 months, in a week. You want to trade in 6 months. You want to trade in a year. That's the first thing. Second thing, have a goal. Okay, I want to make 10% return, make a 20% return. I want to make $100. I want to pay my car off, whatever, $3,000. Write the goal down, and then what? When you hit the goal, pull the trigger. You know what to do because you have a plan, so you don't got to get stressed. Like if you have a goal and it didn't hit the goal, well, it's a goal not achieved. Just ideally, just wait until it hits and then sell, right? That's trading. You long-term investors, you might not be too. You might not care what I say because long-term investors really, like what you do is you just hold your shares for a lifetime. You probably got massive growth on some of these companies. If you did good, and then you die, and your kids fight over the shares. You never sold anything. You never really traded. So that's a whole nother different book. I don't teach that. I teach to make money monthly, and I think it's a little more strategic. Pay your bills from the stock market, and ideally retire into the stock market. We're doing cover calls. We're getting dividends. We're doing trades, mild trading, not day trading. Day trading is very difficult. Different kind of book on that also. What is your average AVG? I like to plan to make 3 to 5% a month return. That's my goal. And sometimes I do better, sometimes I do worse. But if I do better, I'm paying my bills. I'll tell you that. I'm pulling the trigger. Cover call is a great trade because you own 100 shares. You write a cover call for next month or next few months or next year. You're bringing in money, so you're getting automatic money. You're getting predetermined money. 5% return, 10% return, whatever it is. So think about cover calls as like your foundational strategy, I think. If you're not against that, I like that the best. Because you're able to get consistent money and you can pay your bills. And then all you have to worry about is where the shares go. If they go down a little bit, let's say you get 3% a month in your cover call, all right? Your shares go down 9%. Well, it just takes 3 months to get it back. That's it. And then the next 3 months, your shares go up. So now you got your 9% return plus the share growth. And guess what? If your stock's not going up, look, if your stock doesn't go up in 6 months, in a year, in 2 years, I made that tough decision. You got to take a loss, walk away. Okay, let me explain to you why you should take a loss, okay? If you have, like I said, you're doing a trade. You have a time horizon, you have a goal, okay? I'm going to do this trade for 3 months. I'm going to give it 6 months. I'm going to give it a month. I'm going to get 5% return. I'm going to get $1,000 return, whatever your goal is. When the time is there, when the time horizon has been reached, and you don't have your goal, you might have a loss, you might have a small profit. Sell, reevaluate, start over. And if you have a loss, take a loss because what? There's 2 reasons to sell at a loss. One, you save your money for the next trade. Write that down. You save your money for the next trade. And some of you guys don't ever want to take a loss, and it gets to be a greater loss. The second reason to sell at a loss is so the loss doesn't become a greater loss. So you're doing 2 things. You're protecting yourself from losing more because what? It's a losing trade. It failed. Close it. Walk away. Number 1. Number 2, you're taking whatever money you have, you're pulling it back, and you're going to put it to the next trade. So you keep trading. If you have a loss that keeps going more and more and more and more, eventually you get so hurt, you're not going to have any money for trading. And if you had a professional job managing money, so let's say you're managing $100 million as a money manager, and you have a loss, your boss going to come in and be like, "Roderick, what's going on? You know you're going to get fired. If this, you have a, whatever, 10% loss, 20% loss, you don't have the luxury to do that. So cut your losses, sell, take a loss, reevaluate, put it into a much better trade. That's what you do. You have to stop the bleeding. Some of you guys are like, I'm stressed. I'm stuck. I can't. I'm stuck. I'm in too deep. It's not an option, bro. Not an option. Yeah, you keep holding. Yeah, King, I know where you come from, King. I know what you're all about, my friend. We'll disagree, but, maybe you can teach me something. Maybe I can teach you something. You eventually, I don't know, it's like a bad relationship. Eventually, you just have to, move on. You're just going to ignore me. So I can, what's your question, Chris? Tell me your question again. NASDAQ has a lot of downsides. Yes, it's very... Dude, there's risk in stocks. Like, there's no guarantee. Like, I was telling you all these good things about making money. That shit can correct, and then everyone has like a 25 to 40% loss across the board. I'm not gonna lie to you, that will happen. That happens. And then what? It takes like 2 years to come back? Brutal, man. It's brutal. Should I sell my NVIDIA shares? No, don't sell your NVIDIA. Buy here at 116. Tomorrow it's going to be 116 when it opens. Probably climb. Probably dip more than 114, then climb. I would buy here. I would buy NVIDIA here. Because look, the split price was about 120. So let's say this time next year, probably be 150, 160, 170, I think. Oh, NVIDIA is flirting with the top market cap in the world. Blew Apple away. 3 trillion market cap. It's right around there, but now it's down. So now Apple took back its spot, right? But Apple, we know, can't grow like NVIDIA because it's fat and slow. So NVIDIA, with the AI, everything's AI right now. With the AI department, is going to just come back past Apple. It's going to be the king. So I go NVIDIA. I would put my money on it. Don't be stressed. Don't be scared. By the way, this is not financial advice. I don't know you. This is just like educational purposes. I'll show you the trade, but you have to pull the trigger. I'm not trading for you. Nah, I'm going to keep. Okay, let's do a few more trades, and then we're going to wrap it up. I wanted to show you Tesla. Tesla's holding in there, and it has a good cover call. Tesla. I know it kind of got slow. It went down, but it's holding. It's climbing up slowly. It's showing promise on the 6-month chart. So I think Tesla's going up from here, 183. By 183, let's do a cover call. It's June, so we're going to write July. You know what Tesla does? Elon Musk. Look, it has an F. It has an F rating on the A to F. It has an F rating. So, to who are you listening to? Okay, we're going to do options. We're going to do all. Thank you, Short King. Welcome, Sherry. Welcome, Alfredo. Appreciate you. If you guys give me a follow, I'll follow you back after the stream. And give me a like and at least one share. I regret investing and lost $500. Bro, you can spend $500 like on food in 1 month. Dude, do it again. Like, you can make $500 in investing. I mean, you have $500 to invest, then... All right. Okay, so we're in June. We're going to write July 19th. Tesla. Buy the shares here for $183, which is $18,000 for 100 shares. All right. Let's do the 187.50. The right to cover call, 187.50, and that pays 7.3 by 7.5. So it's going to give you $7.30 per share on the cover call for next month on the 187 strike, or $730 for 100 shares. And let's do the return on investment. So we do it's paying, the cover call says it's paying $7.30. So we go calculator, 7.3. Look at this math. Divided by share price of 183 equals 3.98%. 3.98%. Can we just say 4%? Let's just round it up. 4% return on a cover call. Do 10 cover calls a year. 40% return. It's not a super microcomputer, but it's probably more steady and safer than a super microcomputer. At least it's not going to take on the roller coaster ride. I put it at the lowest point. Now we are going up. Yes, we're going up. My account went down 3K because I sold and some losses and building back up. Yes, understood, dude. Just take those like you're a boxer in a boxing ring. Like look at MMA. You take a couple hits, keep fighting. I'm okay with potentially losing. Yeah, well, ideally you pick good stocks, and over the long haul, you'll win. Cover calls on my side hustle. So TikTok's testing me. I have to do this puzzle. I have to put the puzzle in the little piece. Like, I'm trying to teach you guys, and they're testing me on TikTok. It's like they think like I'm some kind of, I don't know, AI computer. All right, back to you guys. Should I sell tomorrow? No, don't sell. Buy. Buy right now. Mark my words. Not financial advice, just, educational. Should I sell tomorrow? No. Microsoft is good. Microsoft's going up. You know what I like? Costco. I'm going to talk about Costco next week. COST. I was just there. The place is packed, jam-packed. Back when Costco was like $120, I was thinking, this is probably a good stock. Probably a good investment, and then fast forward, now it's $800. What? Dude, like, that's a successful trade. Invest on crack? What? Hang on. Let me see. Invest on CRKN. Here, let me see if I can pull it up. I'm just going to see if I can pull it up. I'm not going to... CRKN. Crown Electronics. By the way, I can give you a couple pointers. Don't be upset if I tell you it's trash. I just have a very strict criteria. It's a 3-cent stock, bro. It's a penny stock. What do I know? I know there's no profits. I know there's no 10-year chart. I know that they probably have like 5 employees. I like to invest in stocks that are have 100,000 employees. Because what? They provide real jobs, not fake government jobs like Apple. 187,000 employees. Amazon, 1.7 million employees. Walmart, 1.6 million employees. These are real jobs. Yeah, I can't give you the go on Crown Electronic. I like to see a company that's been traded for 10 years and that has a PE. I can't do it. Have standards, it's like dating. You don't just, go out there and, you know what I mean? Have standards. 5 AI stocks, maybe. Look, if you have 5 stocks, just pick the best one. Pick the best 1 or 2. That's on Tro. I can pull it up. TROW. Oh, T-Row price. Sounds familiar. 118.50. it says, let me look at the chart. 6 month. Let me look at the 5-year chart. They're kind of in a lull. They were doing well before the COVID, and they went down, and they're kind of in a lull right now. T Rowe Price. I should run this by my criteria next week. Come back next Monday. I'm gonna tell you more about T Rowe, but they're kind of quiet right now. All right, guys, give me some likes. Business Costco are ghost towns. The business Costco's are ghost towns. Restaurants going, oh boo. I disagree. What state are you where Costco's are ghost towns? Like, they're packed in LA. You know what? You know what's funny? You will actually have a good company that has a business that is like a ghost town, like you said. But what you want to do is look nationwide, okay? Like, you will find a Starbucks that's empty, somewhere. You may find a Chipotle that's empty somewhere, but if there's 1,000 stores, look at the PE, look at the revenue, right? Look at the volume per day trading. Not Costco. Shit. Not the biz Costco's. Yep, Costco's packed. New Jersey, what's up, player? Damn, I'm afraid of you, New Jersey. I heard about you people. I'm in LA. Qualcomm, NVDA, and Microsoft. Yes, I love it. Love that. Why? Because look, you got real companies. You got companies that provide services and products for 175 countries. Dude, 100,000 employees. How do you look at the chart? Look at the 10-year chart going up. You can't really lose money. So get away from those second-rate stocks. Colin, welcome. Alfredo, welcome. Appreciate you. Give me some likes. Give me some share. Everyone give me one share. I'll be happy as hell. I'm not taking anybody right now, but I will do some lives where we're going to discuss sharing. Today I'm just kind of mentoring. I'm going through my list. Okay, I was showing you that Tesla was giving us 4% return a month on the cover call. That's 40% a year, and they're climbing up from being down. So I think that's a good position right now. They're going up. Let's do AMD and then Skechers, and then we're done. Okay. Welcome, Fizz. Curious. Welcome. Give me some likes. God, you're curious. Stock Market Mentor. Stock Market Mondays. Here every Monday night. I'm going to talk to you. Not saying I know everything, but I know a few tricks. I have a few trades for you. Let's do AMD. You didn't think AMD was going to keep going up, did you? Remember during the COVID, it went down to $90. Now it's back up to $160, new highs. The AMD hit a new high this year. And they're doing great. 160 and 55 cents. Let's do the cover call on AMD. Okay. Options. Click all. The Schwab online is kind of okay. I'm kind of learning how to do it. I like TD, but Schwab bought TD, so no choice. Okay, so it's June. Sorry. Yeah, it's June. We're going to write July. In this case, July 19th. Buy AMD here at 160, which is 16 grand. You guys don't have 16 grand. You know what I'm going to say? I'm going to say it. Sell all this shit in your garage. Clean out your closet. Sell that car that's not doing nothing. Sell anything of value. eBay, OfferUp, whatever. Put that money in stocks. Write some cover calls. I'm gonna show you AMD right now. Okay, so you have 16 grand. That's your business. You're going to write a cover call every month. Stock price is 160. The 165. Here we go. So you write the 165 strike, 165 CC minus one call, right? It's paying 520 by 535. Let's just say you put a limit order for 525. Okay, it'll probably take in 10 minutes. So you're gonna get 100 shares together for 16 grand. You're gonna write the July 165 strike cover call, getting back $525. Now let's do math. Return on investment. 5.25 divided by share price of 160. Let's do it. 3.28% return. 3.28% return per month times, look, you 10 cover calls a year. You're going to have a 32% return, 32.8% return a year. Yes, the share price might come down a little bit. It might be a little choppy. You might have to get some assignments. But let's just say you come out of the deal with a 30% return for the year. At $1 million, you're getting 300 grand. I wouldn't be mad at you. I mean, like, I'll come to your boat, you know. Here's the plan. Meet at the boat in the Caymans. I will supply the cigars. Cover calls, pay your bills, retire into the stock market. Keep telling you guys. All right. I like to do 10 cover calls a year because what? Because it's doable. You can technically do 12, but sometimes you're like waiting for the right time and you lose some time. So you can mess up and still do 10 calls and still do great. It's a doable strategy. Write that down. Questions? Crazy Dot, welcome, appreciate you. AIDS, welcome, appreciate you. Corgi, Male, RSI indicates that NVDA is oversold. Okay, NVIDIA, hey guys, NVIDIA is oversold. All right, I like that, love that. Bye. Chihuahua, dividend and coverage on my life. A. Jerome, welcome. A. Jerome R. Butler, appreciate you. Everybody give me some likes right now. Give me one share. I appreciate you. And we're going to do Skechers and then close out. A. Jerome, I'm with you. Dividends and covers. Like, cover call is arguably the best trade on the stock market. Like, I see these, fancy option traders, fancy day traders. They take a big loss, and then the boss tells them, listen, you're going to go back to cover calls. If you don't, you're going to get fired. All right. Skechers. You guys have like at least one pair of Skechers. They're growing. SKX. Can someone tell me the market cap in Skechers? We're going to do the cover card now. Ooh, $73. Oh, Skechers hit an all-time high. That's a reason to buy. Appreciate you. One Kick. Welcome. I'm an engineer for this company, and I'm retiring 10 mil, so sell now. What company? Oh, you're retiring, so sell, because when you leave, it's going to be fucked, right? Love it. A great night, my friend. Love that, what you are doing. A. Jerome, come next Monday. I have more. Follow me. I'll follow you back. Send me a DM. NVIDIA 2100. Oh, okay. All right. NVIDIA down to 100. I'm going to bet you $100. Well, I shouldn't do that because it might. But I'll tell you what. Let's look at it every week next week. You say this will go to 100. I'm going to say no. I'm going to say it was going to climb up, come back from here, and climb back up. They say that whether you're short or long, you're right. It's just a matter of timing. So if you put a trade out there, and you hold it long enough, it may hit. So whether you're short or long, people have both calls and puts. It's like put a call and put out there, go months out. and just wait. And when your put hits, when the market goes down, your put will hit, close at a profit. The market goes up, your call will hit, close at a profit. See, it's a win-win. It's just timing. That makes sense? I don't know. Okay, Skechers. Click all on your options, all on your dates. Okay, July. We have it for June. We're gonna write July. Maybe the 75. Let me see. Yes, 75 cover call. So Skechers is only 70. Thank you for the follow. I'll give you the follow back. Thank you, YTAP. Skechers is only $73. So like the value is that it's going to be $7K, $7,300, 73.77. Buy 100 shares here. Write the cover call for July next month. Write the 75. Get paid 140 by 145. Let's say 140. Here's your business. Get $7,300. You're gonna get $140 a month on the cover call for Skechers. Why not? I won't be mad at you. Let's do the math. Let's do the ROI. Clear. 1.4, which is your premium. That's $1.40 per share. Times 100 shares is $140. And $140, that can pay like your gas bill, maybe electrical. Pay some bills. 1.4 divided by share price of 73.77. 1.89%. Can we just say 2%? I'm just going to round it up. 2%. Now, let me explain something to you. 2% is not a huge or great return. But it's Skechers, bro. It's like a cheap stock, and it's probably going to be somewhat stable. It's not going to be like crazy roller coaster ride. They're pretty consistent. So if you do 10 cover calls, you're getting 20% a year, and you'll probably get some share growth. I was doing Skechers for like the better part of 10 years, and it was like 20, 30, 40. I remember it was 50. Now it's 70. So maybe maybe put some share growth on that. Let me just look here. If you do the 77.50, you're getting 55 cents. Not enough. You guys are doing cover calls or any trade. If you're not getting the right amount of premium, what you can do, put a limit order. Okay, write this down. If, let's say, you're getting 2% on Skechers and you want to improve that, what you do, since it's paying $140 for the 70, buy the shares for $73, write the cover call for the 75, but then you're going to put a limit order. You can put like 160, right? So the stock goes up a little bit, that 160 strike cover call will click. Now you're going to improve your return. So I'm not going to be mad at you if you put limit order a little bit higher, right? So let's just do this. 1.6. Let's improve. Divided by 73.77 equals 2.16%. Let's just say 2.2. Okay. Hey, we just went from 20% a year to 22% a year. See? Improvement. Limit orders. Like most of these stocks bounce up and down a few points a day, so put limit order, and if the stock goes up into your limit price, it pulls the trigger and you get your trade. In this case, a cover call. Make sense? Any questions? You guys have your journals out? Journal these notes. I have a great night, my friend. Love you. Thank you. Almost done. Hey, hang with me. I'm almost done. Don't leave too early. I got 19 people in here, guys. Give me one share each and give me some likes. Appreciate you. I'm going to follow everybody that follows me. It is time. It is time to wrap up, guys. I appreciate you. We're going to do TikTok Monday nights, every Monday night. God, your care, stock market mentor. If you have any questions, send me a DM. I'll do my best. Want to start investing? What should I invest in? Open your stock market account at Schwab. Put some money in your stock market account. Buy some shares. NVDA, Apple, QQQ, Starbucks, Netflix, Chipotle, Skechers is just hit a new high. The theory, you hit a new high, hit another new high. It's going to keep on hitting new highs. Keep on, probably $100 by next year, the next 2 years, maybe. Thank you guys. Appreciate you. See you next week.